Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Thursday, everybody. Hope everyone is doing great. All right, so as always, this show is about your questions. What have we been talking about for, I'd say, the past few weeks here at Charts and Coffee, and also in the free videos posted right here at the Simple Trading YouTube channel? Staying bullish, focusing on an early January dip, which I think we got, and focusing on a bullish window, a pretty small one, between basically early Jan after the dip, after whatever that little divot, as I was calling it, was, to about mid-February, and then we'll reassess where we are in terms of maybe retesting the choppy highs. Maybe we've organized into an uptrend, as I talked about. I'm expecting in the Dow, and how the shift, because of the Dow relative outperformance amongst the indices, points us then to a different group of sectors. Check that video out over at the Simple Trading YouTube channel if you haven't at some point, which is the video titled Where I'm Looking Next for Clarity. All right, so let's get to the questions. Great to see everybody. See the questions streaming on in. So let's get to it. First off, Jim. Hey there, Jim. I really liked the breach retreat, the day trading. Yes, we've been talking so much about the current environment and how we want to stay bullish, even though things are going to be tricky. Take advantage of oversold buys at the bottom of the range using a Darvis slow stochastic combo, finding the relative outperformers, buying those in the wave. And then I thought, you know what? We haven't talked about just some good old-fashioned day trading. And this was one of two trades that we did on Tuesday when I was in the futures room and the day trading room. And I'll be back in both those rooms right after the show. But I do appreciate that, Jim. Thanks so much. All right, next question. Hey there, Colwan. My thoughts on Boeing? Sure. All right, so if I have this sort of overall expectation of potential bullishness in the Dow, Boeing is definitely going to be helped by that. The thing that I would say you want to keep an eye on Boeing for right now would be what it's testing at the moment. Meaning, notice that right here, we've got the 200. We have the 200 propulsion acting in there, but we've got the 200 exponential moving average sitting right in here. Be really careful, because this is sitting at the top end of the, as you can see there, the Darvis. So that is actually resistance, potential resistance. And I'm sorry, not the Darvis, the V-score. And then we do have some previous Darvis levels coming in here. You see that right in there? Thank you, Darvis. So just be careful. I think if you can get a pullback of perhaps about 50%, even down to the point of control, which is sitting right here. So that point of control is really good support, and maybe about the halfway mark, which just sort of roughly is in that area. That might be a really good pullback. Okay. All right. So that is Boeing. Next up, Christian asks, PLD. All right. It's a REIT, ripe for a long entry on a pullback, or has the structure broken? Awesome question. What a great way to phrase the clarity of what you're seeing. Awesome question, Christian. So this is the area that we're looking at in this environment. So we have a yellow environment that we had 5 sessions ago. We have 5 red grab candles. By the second red grab candle, we have absolutely confirmed that this gorgeous trend that we had, this long-term double green, is broken. But most traders, sadly, look at the market in a really binary way. Rather than asking, where is the next level of support, And I love, see, this is what I'm saying, Christian. You're looking at the market in a way that's sadly some rare air because, yeah, we still want to be bullish. The only thing that's kind of standing in the way of some nice follow through is that right there, little circle of doom called earnings. Who knows what it's going to create, but it's going, whether it's bullishness or bearishness, but it is going to create some volatility. So be careful because we're inside that 2-week window. Implied volatility has shifted to favoring the selling of premium more so than the buying of premium. So it's favoring options sellers, not buyers, but it's a good looking chart. It just has wandered too close into that window. And where does that window actually begin? It began on the 4th. So that's where we enter that tricky little window. So not the 4th, the 5th, sorry, but there we go. That's that tricky little window. And it's kind of interesting that as we got into that window, this is where the wheels seem to be falling off the wagon. So maybe a post earnings entry. I'm not a big fan of holding through earnings. So earnings is really the bigger issue there for me. All right. Michael says, no jokes this morning. Just curious, how do I go about starting the process to create a watch list every week or day? So actually, Michael, the video that I cut yesterday, the where am I looking for clarity video, would probably be a really good place because what I did show at some point in this video, yeah, here we go, is this is Koyfin. Been using Koyfin a long time. And this is where I look at, now, if for those of you that catch my Thursday premium video, we talk about relative performance at the sector level. We talk about relative performance at the industry level. And that's where I would start. Where's relative performance? Then go take a look to find where prioritizing trends that are still visible in indices, that are still visible in sectors, that are still visible in stocks. I would always prioritize trending markets, preferably in trending sectors, and then we can start looking at choppy markets. But it's really starting with structure and relative outperformance. It's always about that relative outperformance. So thanks for the question. And that's really it. And then it's just a lot of manual sort of one symbol after the other after the other. I'm really old school. I'm a fan of visually looking at the symbols as opposed to kind of letting a scanner do all the heavy lifting. If and when I do use a scanner like the simpler scanner, I still will take that list. I still have to parse through the relative outperformance and where those individual stocks are weighted in the ETFs, and I still have to go look at the individual charts. So however you get to that list, that's still the process. Thanks for the question. Hey there, David. Any thoughts on Starbucks? Not really that different than what I think someone had asked about maybe the other day, which is previous low. Look at that nice Darvis. So we're still hanging out in this area. But I think the bigger issue, as you can see right there, is earnings. So I will wait post earnings. If we've got earnings on this thing on 27, that means that the cutoff is 13, which is today. So either I get into this today or that's it. So if we are looking for maybe some kind of earnings bounce, which is, to me, earnings are very, very tricky. Maybe we get up to the 50% area. That would be terrific. That'd be a heck of a bounce, something like that. Today is looking like we could see the confirmation of a minor low. You can see where we are pre-market at the moment. As long as we don't take out that minor low, as long as we don't put in a lower low today, keep an eye on a potential breakout through the resistance of the Wednesday high. All right, that's what I would look at in terms of the setup. All right, so that is Starbucks. All right, moving on. Can we take a look at XLU? Jalen, absolutely. All my cards on the table. Got skin in this game. We are long XLU from the aggro, from the moderate, and from the conservative level. So I've got a full position in the wave in XLU. So it was a good uptrend. It now is a decent uptrend. It's moved a little bit into chop. But remember, broken trends, which by the way, no red. Notice there's no red grab candles here. So this trend is intact. It's just the structure via the 8, 13, 21, and 34s. Those EMAs we look to stack, as we like to use that jargon here at Simpler. It's not a stacked EMA scenario. It's yellow over yellow. It's a non-trending environment. But that non-trending is only 2 sessions long, and it's coming on the heels of a pretty good uptrend. So I would keep my bullish bias and focus on oversold buys. We start talking oversold buys at this point. Well, this is where we take a look at the stochastic. Is the stochastic indicating that we're dipping down into that oversold range? Not yet. That would be closer, ideally, to the 20 reading, right, on the slow stow. Now, if you say, Rag, that seems kind of conservative. What about something a little bit more aggro? Let me give you all a tip here. If you are looking to make your slow stochastic more aggressive, please don't deviate from the settings that I've been sharing with you all for, years, right? Don't shorten this. Don't mess around with this, because you can get really cutesy with these settings, the K and the D. Don't do that. It's really not going to move the needle. What's really a better idea is to say, well, if I want a more aggressive slow stow interpretation, go 70-30, right? Go 70-30 on the overbought oversold. That's a really easy way to increase sort of the, moving from an aggro to more of a, actually moving from a conservative to more of a aggro type reading. But the other thing that we want to keep an eye on is the switch from red to green. And that's really where, if you're not going to wait for the 20, or even if you crank the 20 up to a 30 to have that more aggressive reading, that's the way I've always taught that. Look for the transition from red to green here, and then that's going to be probably a pretty decent confirmation. But you know what? I don't really need a lot of that. As long as we're hanging out in the wave, as long as we're above the 55 prop, 55 propulsion right there, we're good. We're good. So I'm long this. Those are the reasons why I think we got a lot of things in our favor, and we'll continue to look for follow through in utilities. All right. And by the way, I know that utilities are considered a bit of a defense. By the way, and I was talking to the folks in my Sector Secrets Mastery room. We've got XLP on the radar, gang. We've definitely got XLP as well. Not that I'm playing defensively. We have some terrific trends in those two sectors. So keep an eye on them. All right. Next up is, can we look at Crow Force? So beautiful trend. Now, really rocky one. And actually it wasn't even a trend. So really rocky, but bullish grind. I mean, this is a market that is just grinding, right? Even though we have a pretty fresh uptrend here, it's kind of a grinding market. That means we're seeing higher volatility. We do see some good support in the wave. Excellent volume ledge through here. Really nice volume ledge through there, Alan. So if we can get down to that volume ledge, if we can get down to the 21 propulsion, which you can download, by the way, gang. Some of these indicators that I'm talking about, quite a few of them are available over at countdowntrader.com. So if you want this little dot that replaces the 21 exponential for me, you can go grab that over at Countdown Trader. You can grab the grab candles too, and the wave over at countdowntrader.com. So I like that buy, especially look at the way it's syncing up with those volume ledges. I do like that a lot. That's a good looking, I might jot that one down. That's a good looking chart. It's going to be a little bit more volatile, but I do like the structure. So thanks for the question, Alan. All right, let's see. Nis asks, what are the moving averages I use? The upper is 8, 13, 21, and the lower is 34. That's the way I look at those four moving averages. I don't want to look at them like in a single row. I don't want to know when they're all stacked. I want to know and differentiate the 8, 13, 21 from the 34. All right. Can we take a look at STNE? Of course. All right. Take a look at STNE. This is just a red, straight up red downtrend. Really nice downtrend if this is the kind of symbol we want to look for if we want to be short. Look at all this. Yeah. So every time we go yellow, I'd look for an opportunity to fade an over bought level. Same thing here. But, we're below 20 bucks. We're probably at this point, let me show you here. Once we break 20, it's a very different psychology in terms of a symbol, because you're going to find the bargain hunters start to make their way into the market. And you see that on the volume right now. There's your point of control right there, right around $17.50. We're going to have resistance likely waiting around 20. But when we break 20, there's a whole different psychology going on. It's really a volume game. But in this area, I'd love to see the yellow hold on the JT multi. And at that point, we have, thank you, Darvis, right in there. We have Darvis up in here, along with that 20. We might want to look at a potential break. But it's tricky because I don't want to guess at where our downtrend is going to stop. I just know there's an interesting psychology below 20. Lots of volume in this area. So if you want to join along with the volume long, that'd be one thing to do. Otherwise, short the rips. If we were above 20, at this point below 20, I'd probably start to take on a little bit more of a bullish bias, as long as the price action sort of clings to the gravitational pull of those higher volume ledges of the point of control. So you really don't want to see price do much more than just kind of gravitate around here and eventually, maybe move higher. Okay. That's the way I treat that. A couple nuances there with the $20 thing. All right. Okay. So next up, John, I see your question there. I haven't really put a lot of thought into the block options on NQ. No, I don't know yet. I mean, we've seen this in other markets and it really hasn't changed the way that I trade it. I can't say that I have any really strong thoughts about it now. You know what I'll tell you? Anytime something is introduced new to the market, what I do is just observe. I'm not going to guess at what's going to happen, but I'm just going to say, well, what is actually happening and how is it happening? And I'll just kind of observe for a little while. So maybe from Jan 24, give it about 2 weeks. See if some of your, for example, you have a couple hypotheses there, right? Will it become more herky-jerky? Let's see. I really don't know, right? I always want to try to hold off, observe, and then say, okay, this is the way that it seems to be behaving. Now we can adjust, if at all, accordingly. All right. Thanks, John, for the question. I really haven't put any thought in. I didn't even know the date. I have not really put much thought into it, though. So, but thank you for the question. Honeywell, daily long, for me, not yet. I mean, we're north of the 200, which psychologically speaking is important. What I would say in something like Honeywell is, who's Honeywell hanging out with, right? That's what I would say. Who's Honeywell hanging out with? And probably the best thing to do, let me log in here. Probably the best thing to do would just say, okay, what else is moving with Honeywell? And ultimately, what do we need to do to be able to find the relative outperformers? Maybe it is Honeywell. I don't think so, looking at its movement, but I'm going to take a look and you can see how we break this down. I wanted to show you, I get this question from time to time. How do you look inside the ETFs? You look at the holdings. So we'll take a look at XLI, which I'm bullish. You can keep an eye on some of the more bullish ETFs. And yeah, I don't think Honeywell is a relative outperformer within that group, but the way we want to do it is look at the holdings within the XLI and go from there. And I will tell you that once you start looking at that relative outperformance type view, you're going to find how much better your watch list building is going to be. All right. Okay, last question before I head off into the rooms. Next symbol I see is LCID. Okay, so question is on, where did it go? Was it Lucid? Oh, I lost the question. There we go, Mike. Lucid. So, of all the things that I could trade in the markets, why would I look at CHOP? And why would I look at CHOP at the top of the range is the question I ask myself. So if I'm looking at Lucid here today at this moment, no, I mean, you can definitely tell that those three green grab candles will definitely lure in a lot of momentum chasers, which is fine because if the market keeps going up, terrific. But if you follow sort of some Fibonacci patterns, 3 up days is not something that I want to buy after. You don't want to be the buyer on the 4th day usually. So with a good understanding and a slow stochastic, 1, choppy market. 2, thank you, Darvis. 3, that's the buy area in here. So I don't have anything with Lucid now. To me, it's made the bulk of its move at the moment. And if you have an understanding of a good slow stow setting, take a look. I think you'll love this. This is where it fatigues. So it could keep going, of course. I mean, we'd need to see a breakout at that point. But based on the yellow structure, meaning non-trending, and then see this little transition that's happening, that green to red. Gang, this is the slow stow that I give away and show you all the set. Well, I don't give the slow stow away. It's already free. Plug those settings in. You can see what I'm seeing. All right. I gotta go. Day job's waiting. I'll see you on the day trading and in the futures room in just a moment. Be good to each other, gang. Thanks as always for being part of the caffeinate and dominate crew. All right, gang. Be good to each other.